With regard to Ethereum, I think Ethereum's a security. I think it's pretty obvious it's a security. It was issued via an ICO. There's a management team. There was a pre-mine.
Michael Saylor, in his latest interview, explains the difference between Bitcoin and Ethereum and why he thinks one coin is more secure over the other.
There's a hard fork. There's there's continual hard forks. There's a difficulty bomb that keeps getting pushed back. The difficulty bomb is going to wipe out the entire ETH mining industry. It's going to obliterate it, murder it, okay? The fact that somebody is able to murder an entire industry and then they keep changing their mind every 6 months about whether to do it or not do it is indicia that it's a security and not a commodity. For it to be a commodity, there can't be an issuer. And the truth is, you can't really make decisions. I mean, one of the fundamental insights in the crypto industry is the fact that you can change it is what makes it a security. So if you look at most of these cryptos where they have hard fork after hard fork after hard fork, the problem with a hard fork is that changing the protocol means that some development team is making a decision. And if you can change the protocol in a material way, you can change the monetary protocol, right? A hard fork can change the issuance pattern or can change the value of something. And so that makes an investment contract under securities law. And that means it passes the Howey test. So what you want is a completely decentralized protocol where nobody can change it, even if they wanted to change it. So fundamentally, the problem with Ethereum is they keep changing it, right? From a securities law point of view, right? And there's a team of people that make recommendations and want to establish yourself as a digital commodity. Then you're trying to create something like gold in cyberspace. So for example, no gold miners in the world could change the physical characteristics of gold, right? If a government passed a law, I mean, they wouldn't send an email saying, oh, gold is now steel, or steel is now aluminum, right? You can't, if you can change the characteristics of it, right, then it's not a commodity, it's a security. And securities have a place in the world, but they need to be sold to the general public pursuant to a disclosure, full and fair disclosure. You want to take a company public, you have to disclose who owns the company, what are the risk factors. I mean, in theory, you can create another digital commodity, but you can't leave questions unanswered. Oftentimes, people in the crypto industry, they think, well, we'll just resolve this by taking a vote. Taking a vote doesn't make something decentralized. If 51% of the people vote to double the supply, or like if you look at the Solana thing, Solend last 2 weeks ago, the fact that you can vote on something is proof that it's a security. If it's truly decentralized, then you have to release the protocol into the world and not change it, not even contemplate changing it. In fact, one of the big problems with all these proof of stake networks is, in order to get them to work, they have to keep doing hard fork after hard fork. And the reason they're doing it is because they're putting the security into the software instead of into the hardware or into the physics. If you're relying on the physics of the network with proof of work, then you don't have to keep upgrading the software. If you keep upgrading the software, then someone's got to write the software. And when you write the software, you end up with this exploding complexity, and then you have to keep changing it. And so this pursuit of functionality and performance via continual upgrade, that makes you a software company. So that's the challenge in the crypto space, that really they're just all securities. And the problem with it is they're all securities trading on exchanges that don't have a license to trade securities, and they're being traded by management teams that haven't issued a registration statement, which means they're non-compliant securities. But what I know is there's a lot of uncertainty. So you're either a speculator or you're a venture capitalist, and you're waiting and to see what'll happen. And Bitcoin is different because it's proof of work based. And ultimately, there was no ICO, there was no pre-mine. Nobody could change it. Nobody wants to change it. It doesn't need to be changed, right? And so you would generally think, you got to think more like genetically, like that's what you're trying to do with a crypto asset network. You're trying to release a protocol and not change it. And so it's one more point I'll make here, which is from an institutional investor's point of view, the point at which you consider trusting a crypto network is somewhere in the range of 5 to 10 years after people stopped changing it. I mean, I would say it's after if there's a hard fork to fix a fatal bug, maybe that's okay. If you're fixing a fatal bug, or if you're improving the network against a fatal security threat, right? Then maybe you can get past that. But if you're hard forking to change the functionality or change the performance, change the block size, anything like that where you're changing it, it resets the Lindy clock, and you have to wait for 5 to 10 years. After 5 years, it's risky. After 10 years, you think, well, maybe all that combination of protocols is going to work. If someone changed materially that monetary protocol, it calls into question, is the thing robust? Is it Lindy, right? And I'm not advocating Google stock or Apple stock or Amazon stock. I'm not even advocating my own stock. Like, to be clear, like, I'm an equal opportunity, ambiguous analyst with regard to property. I'm not going to tell you to buy property in New York City or Moscow or Los Angeles. I'm not going to advocate a trophy asset or a collectible. I'm not going to advocate or opine on any other crypto. I don't know how they will end. I'm open-minded to the sense that it's possible to create things, but there are many, many different ways to do it, right? I mean, there's a lot of ways to create functionality, and there's a lot of models, and I think there are a lot of different countries in the world, right? So different countries and different regulators will have different opinions, and different management teams will do different things, and stuff will happen. And I'm not going to advise you to invest in any private company. I'm not going to advise you to invest in any public company. I'm not going to advise you to invest in any of 20,000 other things. I think that those are all individual decisions that people have to make.
But cryptocurrency is global, right? It's not just in the US. So even if US cracked down hard from a regulatory standpoint, do you think crypto will continue to grow and gain usership in 5 to 10 years?
Digital property in the form of Bitcoin is going to grow. I think digital currency in the form of the dollar is going to grow. I can't be sure which network, but I think that the overall digital currency network will grow. I think that other digital currencies will grow as well, but much less so. I think that the dollar is the king winner, and I think the euro maybe number 2, and the CNY, and then all the rest will be small. And I think that ultimately the digital currency will eat into fiat currencies. The digital property, Bitcoin, will eat into properties. It'll eat into gold. It'll eat into real estate. It'll demonetize other corporate bonds and stores of value instruments over time. I think that there'll be a lot of innovation in other areas, but again, most of the proof of stake networks, they're all companies, right? And so they're private companies, and if they can come public, maybe they'll be, the next Google or the next something. But the way I think about them is I think of them as technology ventures, a la Instagram or Snapchat or something like that. And you manage your risk accordingly, right? I mean, do you trust the people doing it? Do you understand the regulations? So it's what happens, who knows what happens, right? People tend to get very sensitive when money is at stake as opposed to other things, but people are sensitive about a lot of stuff. So if you want to invest in technology, then you go and invest in technology, but just keep your eyes open about what the risks are. The regulatory risk is huge if you're going to move money around. And the reason that Bitcoin works is because the use case is property. I'm buying a block of money, I'm holding it for a decade, and I'm not moving it around. At the point that you want to move the money 1 million times an hour, and you want to move it to 1,000 or 100,000 counterparties, you start to cross into other regulatory jurisdictions. Right now, you're dealing with the Treasury and the OCC, and you're dealing with tax issues. And so if you're going to get into those use cases, the big question that everybody in crypto has got to ask themselves is, why is it that Google hasn't already done this? Because Google has more money than God. Why has Amazon not done this? Why has Citadel not done this? Why has Apple not done this? Why has a centralized company running in Silicon Valley not done it? They all have infinite money. They all have infinite programmers. And if the answer is because they thought they'd get shut down by the regulators, then you have to figure out how you're going to deal with that, right? And if the answer is they could do it, then the question is, do you need a token or not? The challenge with funding anything with a token is a token looks like equity. If there's a management team and it's giving the token to itself, or it's selling the token to an investor, it's equity. And equity is a security. And securities could be sold pursuant to full and fair disclosure, and there's always a bunch of laws around them. So if you're actually ducking all those rules, then you got no competition. And the reason you have no competition is because it's illegal and unethical, right? So you got to make sure that you work out the law and work out the ethics. And if you're an entrepreneur in the crypto world, and after that, if you're an investor, you just got to have a very, very thoughtful opinion about what is this thing I'm investing in, and how is all this going to work itself out. Right now, it's just a very murky world.
Subscribe to keep learning the truth.